All right, folks, let me just get this out of here. All right, so we have the S&P 500 September delivery contract for 2022, and this is the fair value gap I was mentioning last Friday in the market review on the YouTube channel. I mentioned how I felt like it was likely to go down here and rebalance in this area here, and I felt like it was likely to come down in here to reprice into this area. So if we look at how price has been delivered today, it's been pretty much a down day, and then it reacted off of the fair value gap here, and I was playing that action here on late afternoon. So that morning session though was a little brutal. It was a lot of give and take, and we're going to go into lower time frames. But before I go into any further on this time frame, I have no idea what we're going to do tomorrow because FOMC at 2 o'clock. My students know that we sit still. We don't do anything. We wait for FOMC to release. First 15, 20 minutes, maybe 30 minutes of trading after FOMC hits the market. Then and only then would I be going in looking for something to trade, imbalance, stop run, something to that effect, but nothing heavy-handed. Let's go down to an hourly chart. All right, so we have today's trading here. So we had a gap opening. I've taught you recently about those and extending those levels out in time. You can see we had resistance in there. I'll have annotations and we got down to a lower time frame below the 1 hour. So we traded below relative equal lows here, and I was on Twitter today. I was outlining the 39.20 level. I mentioned that that would be a good idea to expect profit taking, or you should be taking profits on your paper trade and demo trades while you're learning. And look at the bodies of the candles here. Look at the close on that candle. 19.50. They open on this candle, 19.75. And all of them basically real close to that 20 level. You had a couple wicks that went down below it, but ultimately accumulated and went higher. We look at the 15-minute time frame. Here is that daily fair value gap. That's what that blue shaded level is. Okay. And this is what I was showing today on Twitter, kind of walking you through. Just scrunch it up a little bit. Here's the gap opening. Extend that out through time. The market works that level. Another fair value gap in here. It closes that in. We have a shift in market structure, which will be more apparent when we get into the 5-minute chart after a stop run, and then it starts to work lower. This is what I mean by a lot of give and take, back and forth, back and forth, back and forth. This can wear you down if you don't really have a maturity in your study of price action, been around for a while, if you will. This can really cause you to second guess trades. It can cause you to think that you have something, and then quickly you feel like it's not likely to pan out, and it causes a lot of second guessing for new students, for new traders using the things I'm teaching. That's normal, okay? We like to have days where it's very clean, symmetrical price action, where the imbalances are obvious, where the stop, either buy side or sell side, is clear. In here, it's a whole lot of just back and forth. Every time it would go down, it would come back up, rebalance, come back up, rebalance, come back up, rebalance. So it's not a matter of just one-sidedness. It was a very difficult morning session for anyone that has felt that today. That's a normal thing. Okay, I've watched a couple live streamers today, and they were struggling this morning. Not that they trade my stuff, and I'm not here to beat anybody up in regards to that, but I was simply watching them, and they were having a hard time reading this as well. We were looking for a bearish bias, obviously. I was looking for a significantly lower draw on liquidity, and again, that was on the daily chart. But and again, we'll talk about that in a moment. But I want to drop down into the 5-minute chart. Okay, and there is the business. Again, here is the gap opening right here. extend those levels out because we are not supply and demand. We're not Elliott Wave. We're not any of that garbage. So we have the buy stops here taken, and it returns back to the low end of that gap. It breaks the swing low, so we have a shift in market structure, fair value gap. So notice what we have here. We have a small gap there, but if you have two of them, expect it to likely to run up into that, which is what we get here. Okay, so that's a short. Breaks lower, comes right back up in bearish order block, sells off, back and forth, back and forth. What do we have to submit to? That fair value gap down here, and let's scrunch this up. It's going to be a little sloppy, but it'll take you to where I was pointing to. Over here, I had the fair value gap mentioned on the Twitter chart, and I'll let you go take a look at that. You can see why now I like to do PowerPoint. The chart's exactly how I want it, and I don't have to wrestle with my OCD. So anyway, a lot of this back and forth is problematic for someone that wants very clean price runs, the symmetrical price moves that we're looking for that are very one-sided. It's hard to read that in here, so you have to submit to the higher time frame bias, which was that daily chart fair value gap down here. Okay, so again, I'll let you see that range. That's it right here. And we also had an hourly fair value gap, which I'll draw the levels up in a moment, but I want to kind of go through this real quick. The morning session, right before lunch, we had one more fair value gap with a shift in market structure there. That's a short as well. So there was only two real primary setups that's for the session in the morning. That is this one here and this one here, digging into the 39.20 level, which is what I mentioned. A good limit order would be placed around there. And again, I could place the tweets on this chart, but you can copy the links from my tweets and put them on your own charts and see where I said what I said. Then it digs down below that low here, right here, and then we have an optimal trade entry. And it's better to look for strength and not fight this type of movement. So going in with buying strength, running relative equal highs, digging back up into that potential gap opening. So I'm going to extend this out in time. I don't know if it hit it or not, but it looks real close to it, doesn't it? And that looks like it fell just short of it. So that's not bad, but it's still a draw on liquidity. So when we have draws on liquidity, notice the description of what it is I'm referring to, and that's why I call it that. It's not a definitive target. It's not a static target. It's not a cast in stone. It's not a absolute panacea going to be the only thing that it goes to. Okay, it's just drawing price back to it. Okay, now we don't need the actual draw on liquidity to be hit or traded to or retraded to or repriced to. None of that has to happen for us to get profitability in our setups. So we're looking for just the likelihood to frame that bias where price should likely gravitate to, and when it happens, we can look for logical levels to take profits at. And this is where we're at the moment. Okay, I want to go up to the 60-minute chart once more. And scrunch this up. Okay. So here is the level I had in mind initially. That would be the draw on liquidity. Now if you look at the NASDAQ, okay, look at the NASDAQ. I'm not going to do that for you here. This is for your own homework. Look at your NASDAQ chart, same hourly, and where this fair value gap forms on ES here, NASDAQ was able to go down and get into its fair value gap. So this is a little bit of a SMT divergence. It fails to go lower, and we have that nice extrapolation to the upside and returns back into the gap in here. So this level here, let me go one more time, Showing you with the hourly chart. Just falling short of that right there. I'm putting this there for myself because overnight I'm going to watch how it reacts to that. And I'll extend them when it's necessary. It may not go up there, which is why I closed the trade that you saw me at the opening of the video. But I want to be flat, have a clean slate going into the FOMC tomorrow. No real bias. I don't know what it's going to do. I have to wait and see what they do at the time of the FOMC announcements. And those types of events are very, very volatile. They can be very painful if you try to get in and find yourself offside, and it can move a lot against you. And if you're lucky, and I'm not suggesting that any of you should try to roll the dice to try to be lucky tomorrow, but if you are lucky and it starts running in your favor, it can be an exhilarating feeling. But just remember, that's casino time type trading, and that's not what we try to promote around here. At least that's not what I try to promote. So anyway, that is the business for today. We had a little bit of a sloppy morning session, but ultimately deliver with our bias. I don't have a bias tomorrow, so I don't know what they're going to run for. Okay, if I had a gun to my head and I had to tell you what I think might happen, they could do something like run it up, reject it, and come down into this area here. After FOMC. That's one of the things that I'm looking to see if they do. Will I be positioned to be able to participate in that? Absolutely not. So if it does it, during the FOMC announcement and it moves like that, great. It's a moral victory. It means absolutely nothing. I will not be positioned ahead of FOMC. Okay, I might not trade at all after FOMC. It depends on how the market books, and I don't know what it's going to do. And I want you to understand that. So don't go in like there's some secret message being conveyed to you. There's some subliminal message like, "Hey, buy or sell short." No, stay on the sidelines. Sit on your hands. Don't do anything. Study, watch price, see how it behaves. And we'll see what we get when the cards fall. Okay? And until I talk to you tomorrow, Lord willing, be safe.